But I don't feel because I don't want you to know.
All right, I'm recording now.
Can you hear
Right.
me?
So want to analyze TROB, yeah? So let's go
Sir.
to weekly time frame. Let's go to the weekly time frame. Let's see. In fact, let me remove everything here. This is TROB on weekly.
Yes, sir.
Abi?
Yes,
Nice,
yes,
nice,
yes.
nice, nice. Okay, this is our area of interest. This is where we want to look at this immediate price action now.
Yes, sir.
Now, we're going to see that we already have a break of structure.
That's it. AMA candlestick.
We have a break of structure here, but price has not gotten back
Yes.
to our order block. Look at where our order block is. If you watch that video, you understand what I'm saying. Look at our extreme order block here.
Yes.
So this entire, let me remove this guy. So this entire price movement now, what everybody is saying, oh, it's a pump, it's a pump. It's not a pump. This thing here you're seeing is an inducement to trick traders into going into this trade. You see prices start dumping anytime from now. This whole thing here you're seeing is an inducement. It's not a corrective pullback. It's an inducement.
Okay.
So
So it's not actually pumping like people thought.
yeah, that's what I'm saying. That a lot of people think, oh, this pump is real. People will start putting money now that TROB is pumping. But in the real sense, it's not pumping. Now, let me refine this now to this axis. Let me refine this. Now, when we want to draw our range, okay, you can see
Yes.
this price movement now, right? You can see price
Yes.
move from here to this point, and it started ranging.
Yes.
I see it. This is called an
Yes.
impulsive move. It moved from this top to this bottom, but it did not come back to touch our other block. This is our other block here. It
Yes.
did not touch
Yes.
it
Yes. Yes. At the bottom.
at the bottom there. Good. Price did not touch the other block. Now, look at this. Oh, the journey. Okay, now look at this, brother. Let's
Yeah, I'm
draw our
listening.
range. This is the lowest point of the range, and this is where price came to. Now, do you see that this here now, this price movement we are seeing, this range band, is to
Yes.
trick early traders into believing that
It
price
will
wants
go
to
long.
move up. Yes, early traders who are not patient, they will go into this trade thinking that TROB wants to explode. Whereas everything, if I plot my volume indicator now, you will see that there's no volume here at all. So,
Yes. Yes.
so this is called an inducement. It's not a pump. If it was a pump, you are not going to see all these small candles. You will never see
So
small.
once you are seeing small candles like that, that's an inducement in the market.
No, not necessarily an inducement. No, that's not what an inducement is. An inducement is when price breaks structure. All right? When price
Okay.
breaks structure and you start seeing a range above the other block. This is the other block here.
Yes. 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 The bottom.
This is the other block. This is the other block right here. Can you see it?
Yes,
Good.
I can
So
see at the bottom. Yes.
yeah, so all this price movement now is to trick early traders into believing that, oh, this the market wants to pump from here. Then you start buying. And then where are you going to put your stop loss? You will put your stop loss under here. Now you're going to put your stop loss under there, thinking that the market is going up. And do you know what price will do? This is what price is going to do. Price is going to react in this manner. Let me show you something now. Price will come out. It may take out liquidity or it may not. It come down like this, break structure and touch this other block. Then it will move up. It will move up to come and collect the liquidity that is resting here again. Because at this point, there's liquidity here. To come back there, collect all the liquidity, and now decide if it wants to go up or down. Are you getting me? So what you are seeing here, so what you are seeing here now, right? It's not a pump. This is not a pump. Now let me prove it to you. Let's do some mathematics. Can you see? Can you see that there was no pump? Look at the volume bar here. Look at it.
Yes.
Can you see this blue now is representing low volume? So how can you say there's a pump where at the support? Because a lot of people will think this is a support. If at the support level, we're not having high volume, look at low volume. Is it now at the resistance we're going to be having volume? It's not possible now. So this volume automatically now is a sell volume. This yellow one is a sell volume. Red means that there's extreme or ultra volume in the market. Yellow means that there's high volume. Green means there's little amount of volume. Then blue means there's almost insignificant volume in the market. You get what I'm saying? So if at this level now, at this support base, there's no volume. So automatically that means that at the resistance here, this yellow is showing that we have dominant sellers ready to push the market to the downside.
Yeah.
All right. So basically, hold on, please. So basically, this is what it is. This is what it is. So let's scale down now to 4 hours. Let's scale down. We're not going to take this trade though. A lot of people will want to take a sell, but well, it all depends. If liquidity is swept, then we cannot take a sell. But we have to wait for it first. So let's go to 4 hours now and see what's going on there. We go to 4 hours now. Look at how our price is doing. Go to 4 hours. I'm going to see that price has retested this key level now as resistance.
Yes.
Can you see it?
Yes. At the top.
At the top, yeah, good. Let's go down to 1 hour now. Let's see the synergy of what's going on. Look at what price is doing. It's still testing this resistance. Let's go to 15 minutes. You see everything is going to align equally. Look at 15 minutes. Look at 15 minutes. Let me knock this one out. 15 minutes, we already have a change of character happening already.
Yes.
Look at the change of character here from the micro level. We have our chalk already. And price has come back. Price has come back to retest this level. So once we get a break of structure of this point now, we can now say, okay, yes, we want to short the market. Once we get a break of structure from here, confirming this chalk,
Going down.
we know we're sinking to the ground. We're sinking to the ground. That means automatically, that means that we did not take liquidity from this inducement again. But if we don't break here and we go back to reclaim the liquidity, because liquidity is resting above this change of character. If we now claim the liquidity, then that's a clear sign that price wants to what? Wants to tank to the downside. Then we cannot take a short position confidently. You know what I'm saying?
Without no risk.
And without no risk, you have to use your stop loss. But the win rate is obviously going to be very high, because you've seen that liquidity has been taken out from the market. That's the essence of trading liquidity. All right, so that's the essence of trading liquidity. So basically, basically that's what we need to wait for TRO. But all of this pump you are seeing is not a real pump. Not a real pump at all. Come in. Okay, yeah, so let's wait for this guy to be taken out completely to validate this chart. Do you know why we're waiting? A break of structure validates a change of character. You don't just say, oh, price has gotten back to my POI, my point of interest. How are you sure? How are you sure? How do you know? Do you know the mind of these guys? You don't know the mind of these whales. You don't know what they are thinking. They can decide to say, okay, let's come here, let's create another inducement again. Let me show you guys something now. They can decide to say, okay, let us create another inducement from this point. You can say, let's create another inducement from here. Look at the inducement. An inducement is usually a range. You can say, okay, these traders, they think they are smart. Let's use this area now, this point, as an inducement. And then people will think, oh, this is a change of character. Let's put our stop loss here. And obviously, they will be knocked out of the market. So we wait for this change of character to be broken down again to confirm it that, oh yes, the market is going to tank down. All right, so basically, that is what we'll be doing for, that's what we're going to be doing for TROB. So once we wait and see, okay, a break of structure has occurred, then that means that we did not have to take liquidity again from this inducement to be able to push price down. Because the essence of us taking liquidity out of the market or out of positions is to ensure that price can move. Without liquidity, price cannot move. It's going to keep ranging. So whenever you see that the market is trending, just know that liquidity has been taken out of the market. That's the very first sign to know that the market wants to tank. Now, look at something. I gave this signal. I gave this setup, which was STXUSDT. STX, this is stocks. I gave this setup. That was day before yesterday. And if you watch my video, I'm very, very sure that you will see what I'm saying. Now, look at this example now. This trade is still very valid. Look at this example. Read one. Look at this example I was showing you. Now, see the range. See the range we're talking about. Do you get it now? Now, look at this.
Yeah.
Look at this now. Let me remove this guy. See the break of structure that happened. Hmm?
Yeah.
I see it. We had a
Yes,
break of
yes.
structure here. Instead of price retesting and coming back to our other block, which is somewhere around there, it did not come. It started ranging. Look at the range. It formed a range. Hmm?
Yes.
It formed a range and then took out liquidity. Look at the point where it took out liquidity. Now, if I zoom this thing out, you are going to see that this point now, it came back to this other block here. It came to take liquidity back from this other block. So you see, it came to take liquidity out from this other block. This is STX. Now, once this liquidity has been taken, look at the range that we formed. Look at the range that was formed. First of all, let's analyze this because this trade is still very valid. Look at it. Look at the range that was formed. Range high, range low. Let me use pen to. Let me knock this one out and use a pen to, and use a line to actually just illustrate what I'm saying. Now, look at the range high. Okay? Look at the range high. Then look at the range low. This is our range low. Now, I know some of you will ask, how do you draw this range high and range low? The point where you have an impulsive move, please pay attention. The point where you have an impulsive move, either to the up or downside, is where you draw your range line from. Now, from this point, you can see from here, we had impulsive move to the downside. Can you see it? Look at the candles, big candles. 1, 2, 3, and it came here. Look at it again, impulsive move. 1, 2, 3. So this now is our range bound. Here is going to be our range bound. In Wyckoff, we can say, okay, this is, in Wyckoff, we can say this is a buying climax and a range low. But I don't want to confuse you with all those big grammar. Simplicity is genius here, all right? So basically, this is our range high, range low. Now, when price goes out of this range, all right? Who is making noise now? When price goes out of this range, this now is called a fake out. This point here is called a fake out. It's called a trap. And you can see how it went back to mitigate this other block from the extreme higher time frame. So when this fake out comes back into the range, all right, when this fake out comes back into this range, this is where we'll now be thinking of what? Trading from. This is going to be our concern now. All right, this point is going to be our concern. So everything here is what we're going to be dealing with. Everything here. Everything here. Now, when price breaks down, you can see how price broke back into the range with a big candle, taking out all their stop losses, because the reason behind it is that a lot of traders who saw this big bullish candle, we think price wants to go up, and they will act based on FOMO. I'm sure a lot of you act based on FOMO here. So they will put their stop losses here underneath this candle. So price will come down, squash them and take all of their stop losses and continue to ride down to this other block. Because this is where the orders were initiated, the order block. This is where it was initiated to move price to the upside. Can you people hear me? If you can hear me, please just indicate in the chat box. Okay. I think some people can hear me. Okay, all right, no problem. So basically, I'm explaining the dynamics behind the entire trade setup now. So when price comes back into this range, we don't hurriedly take the entry. We now wait for price to mitigate this range here again. You can see what price has done. It has come back to mitigate this range high with this candle. All right, so let's go to 4 hours now. Let's go and see what's going on there. Can see what price is doing. It has what fully mitigated our POI. It has mitigated it. It has broken structure. So this particular project now, anytime soon is going to what? It's going to be coming down. Anytime soon, it's going to come down and take out this particular what? Low here. It's going to take out this one. This might take up to 2 weeks to play out. It will come back and take out this guy here. You get me now? So basically, this is how to trade. Let's see what TROB is doing. Let's see what TROB is doing. Remember, TROB was a fake pump. That's an inducement. It's an inducement. Let's see what it's doing. Let's go to the 15 minutes to see what it's doing currently. Okay. So, okay, it's trying to break. Remember what I told you guys, that it may come back to take liquidity from here. All right, it may come back, take out liquidity from here, and fall back into this range again before coming down. So that's what price may likely do. But if it doesn't happen that way, price doesn't do that, price may just decide to come down, break this low here, and continue to fall. But in most cases, it usually takes out liquidity from the inducement. This is the inducement from the 1-day time frame. Let's see it now. Look at it. This is our inducement from this range high to this range low. It's our inducement. And eventually price will come down and tap into this other block before going up.
Yeah,
I want to show you guys something. I want to show you guys something very interesting. I think this was PEP. Was it PEP? I can't really remember now. Yeah, something like this. Exactly, something like this. Let me knock all things off. Okay, look at what I was saying. Yeah, look at what I was saying. Look at the change of, look at the break of structure happening here. This is an accumulation. It's an accumulation going. You can see we're manipulating the lows. Look at it. We're manipulating the lows and breaking structure to the upside. So it's obviously an accumulation. It's not a distribution.
Please.
All right. This is an accumulation. We're breaking structure to the upside, creating the other block, retesting it, and so on and so forth. But here's our primary concern. Now, let me show you the inducement I was talking about. Look at this. Break of structure happened there. Bam. Look at price has started ranging. I know a lot of you will see price from this point. Eh? A lot of you are going to see price from this point and think this is an order block. This is not an order block. All right, this is not another. Please, when you see this kind of setup, don't trade from here. Although sometimes price may react from this point and go up, but it is not an order block. This is where the order block is coming from. Let me show you guys. An order block is going to be around your discount level. If you hold your Fibonacci now and drag it, this point, you will see your order block happening at a discount level. Okay, usually it's going to be around the extreme discount level. So we can take here as our order block because there's a fair value gap resting above this point. So we can take here as an order block. Because what? There's a fair value gap, meaning immediately orders were initiated from here, the amount of orders were so high that it created a gap. So this is how you are going to know that, okay, yes, I think smart money was playing around this region. You get what I'm saying now? So that's a huge clue for you to know that, oh yes, smart money was playing around this region. Oh. So this, I think here is an order block. All right, so basically this is how it works. So our order block is going to be somewhere around here. Somewhere around this point. So everything you are seeing here now, everything you are seeing here, all these things you are seeing here is called what? Inducement. You can try it out yourself and enter the trade just to test it. Once you get burnt, then you will know that, okay, to a large extent, what I'm saying is the truth. So this trend line, you are seeing here now, the price will come back here again, and come and touch this trend line and probably break it, then come back here. So it is from here now that we're not going to be seeing our orders being activated. Are you getting me now? So guys, I think I'm done for tonight, and I'm really, really happy that I was able to just catch up with you all and just do a few things here. I didn't plan this. It was actually a very impromptu thing, and I want to just appreciate you guys, okay? So, but this particular coin now, this PEP is going to fly. You guys should take it seriously. It's going to pump very, very well after this retracement. Okay, after this retracement, it's going to pump very, very well. It's going to do very well after price comes back here to take out liquidity or to fill this gap. There's a gap here. It's a gap here. So if price does this and comes down, it's going to move up. Lastly, let's see what total 3. Let's see what total 2 is saying. Let's see what total 2 is saying. Total 2 is the total market cap excluding Bitcoin. Let us see if it's going to move to the upside or it's going to make a retracement. Okay. We had a break of structure at this point.
Hello. You receive.
We had a break of structure at this point. What caused the break of structure? Somewhere around here. But I don't think price will come all the way down. It's possible though, but I don't think it's going to happen that way. Because if this happens, it means that altcoins are going to fall drastically. It means altcoins are going to fall drastically. They're going to fall very, very much. But let's see if here can act as a breaker block. Let's see if this point can act as a breaker block. Because I'm seeing also that broken structure here, minor structure though, broken structure, and our price has retested the other block here. but you can see that there's actually a resistance here. You can see there's a resistance here, meaning this is still an inducement. If it was an order block it activated from, you won't see resistance. Anytime price goes to the other block to pick orders, it's going to move with speed to create a trend. I don't know if you guys understand me. It's going to move with speed to create a trend. Someone said he cannot hear anything. All right, so basically, this is yeah, is total 2 a major determinant for altcoins? Yeah, total 2 and total 3 shows you the market cap. But the major altcoin, the major thing that determines altcoins movement is BTC dominance. Is BTC dominance, the relationship between these two. Look at BTC dominance now. It has an inducement. Can you see this? It has an inducement. I see the inducement here. Price has even gone back to retest. So BTC dominance is most likely going to fall. And if that happens and the price of Bitcoin continues to drop, then altcoin is going to bleed. Listen, altcoins are going to bleed. If BTC dominance drops and the price of Bitcoin drops, it means the entire market is going to bleed. So there will be a dump in the entire market. Why? Because a lot of investors are going to be investing their money are going to be saving their money, not investing now. They're going to be saving their coins into stable coins. They'll be putting their money in USDT. At that point, it's going to be the best time to buy USDT and hold if you're in Nigeria. All right. So I think I'm going to end this session. Maybe some other time, we're going to just hold a brief session like this again. All right. One love, guys. I'll make the video available by tomorrow so that you can rewatch and have a better understanding. One love. Peace out, guys.
So having a question.